Let's welcome in Hemendra Hazari right now. Hemendra, what do you think is happening with Reliance? It's moving after 8 years. Do you think there'll be a lot of left out feeling with a lot of investors for Reliance?
Most definitely. See, this heavyweight really has not been doing much for the last 8 years. And now finally, because of Jio and because of something to do with the energy side, we are seeing this movement in Reliance. And Reliance is a huge stock, is a huge heavyweight. So one thing is good for the market that at such a time, when the fundamentals in all the other sectors are very weak, you're seeing this behemoth in the index do quite well. And I think that's mainly because of this 100 million subscribers that they have got on Jio. The only thing is we have to wait and see when a time comes for them to pay for the service, how many of them will retain Jio.
But, do you think markets are also realizing the fact that now at least majority incremental capex is behind? That is something which the street was always worried about. What is the sort of spends that will happen? Now that they have started charging whether it works or it does not work, you think that the street is now focusing only on the core business?
That would appear so. Because anyway, now in the Indian economy, I don't think any corporate is doing much on capex because there is just a paucity of demand. And therefore, it would follow also now that Reliance would cease to do that capex. The only thing now people will closely monitor is the revenue model of Jio and how much income it is making vis-a-vis its cost. So I think that will shift to that aspect. Because of Jio, you're already seeing a lot of bleeding taking place with the other telcos. And even it has compelled some of them for consolidation. So there is going to be this huge restructuring and reorganization in the telecom space because of Jio.
Right. What happens, when a big stock like Reliance is underweight for most of the portfolio and you suddenly start to see 10-15% moves and outlook becoming positive? How does the fund? How do funds react?
Well, they cannot lose out, right? Because they are governed by monthly NAVs, even if they're so-called long-term investors. In India, anyway, there is no such thing as long-term. You're only long-term when you're sitting on unrealized losses. So it will compel fund managers really now to rush into the Reliance counter so that, the month end when the NAVs are reported, for they're reported every day, they have to have some bit of Reliance in them. So you will see a rush most likely for the Reliance counter.
But, for Reliance, if you just look at the numbers for the last 7-8 years also, in terms of EPS, at least they have been growing. So, it still continues to grow, maybe at a slower rate than what it was earlier. And it's still a large nifty stock which is well tracked and it has triggers to grow. So, it may not be a bad investment idea as well.
Yeah, the only thing was there was this lack of confidence because for over a long period of time, the stock, remained stagnant. And therefore, I think a lot of institutional investors had lost confidence. And a lot of the attention was really due to the huge capex for Jio. Now that they're saying that Jio is working on the ground, and the stock price is doing well. See, the stock price movement is the most important movement. You have to be part of that action in the stock market. When a large index stock moves, as you very rightly said, you cannot be sitting on the in the stands. You have to come down and play in the field. So you will see this rush now because all the mutual fund managers who have not participated in this will be reassessing their entire holdings here.
Right. What do you make of the banking numbers that have come out and, essentially the recent rally that we've seen in private sector banking names? Do you think that now Q4 would be the real impact of demonetization?
Well, frankly, to me, it should have been visible in Q3, and I was quite surprised that you didn't find that because the SME sector has been devastated because of demonetization, and therefore you're going to see that in Q4. I just hope it surfaces. It should not again be tucked away. To come out at some future time. And some of the rally in new private sector banks, like, for example, in Axis has become of these rumors of merger and consolidation there. I really don't see how anyone would like to, merge with Axis Bank at this stage. But nevertheless, that is the movement. And I would be glad if LIC or the government could have just issued a simple clarification on this, which would have, dispelled these type of rumors. But the government and LIC, which is one of the big shareholders, choose to remain quiet.
Right. As far as, some of the merger news of Axis, Kotak coming in or Axis getting merged into some other bank, do you think that will be a big trigger for consolidation in the sector or was it expected?
See, firstly, in this environment where you really do not know what is the true asset quality in a bank, and when we know that Axis Bank has this huge problem on its corporate asset portfolio, it's a very dangerous exercise to, merge into such a bank because you really do not know the state of its actual book. Especially in this type of downturn, And you see, what is it adding? Because a lot of these banks anyway have the kind of branches now in the key areas where they want to. And you have this huge employees which you have to absorb. So I wouldn't recommend any such type of large type merger unless it is forced on you in this type of environment, because it's going to shift management's time to the to the labor and the HR integration, which is the critical problem in all mergers. The numbers coming together is far less. The technology integration is far less. The main issue in all these mergers, especially when there are large number of employees, is the softer issue of HR, which can pose a big problem.
Right, but say if this merger were to happen, do you think something like a Kotak can easily absorb Axis Bank? I mean, the size of the bank is different, as you told, the way it operates is different, the sort of client base it has is different. So do you think it will be a tough integration as well, even if it happens?
Most definitely it's going to be a very tough integration. And I really don't see Kotak buying this bank at the current valuation of Axis Bank, because in my view, the book value has to be significantly written down. And unless you do a very thorough and proper due diligence in any bank in this type of environment, and most definitely for Axis Bank, you should not go by the reported numbers at all. Because, and for Kotak, it's a much smaller bank than Axis Bank in terms of employees and size. And therefore, it's going to be a humongous HR issue. Kotak has just about recovered from the integration of ING Vysya, and media reports citing Kotak officials say that it was not easy at all, especially the HR part.
What do you make of IndusInd and Bharat Finance merger, which has also been going through? Do you think that most of these banks are struggling for growth and that's why they are doing such big mergers, or looking out for some big opportunities?
See, you have to find some next trigger which will excite stock market, and stock market always loves growth. But in banking, you always have to be concerned what is the quality of that growth. And unlike consumer companies, sales is loans and you have to get those loans back. So one has to be very careful about such things. Again, in this whole microfinance space, I would like to add they should have been very badly impacted in demonetization, but I really don't see that in the results in Q3, because they operate totally in the cash economy, and that has been drastically impacted because of demonetization. Yet we hardly see the reflected in the numbers for Q3. So I think one has to be extremely careful today if you plan to merge with any of these companies.
But in terms of NBFC's microfinance, do you think the numbers are not as bad as what Street was expecting?
See, that is exactly my concern, that they were not as bad as Street was expecting. To me, that's not a positive sign, because there could be problems coming in the future. Because the environment today, and I've been saying this, for 3-4 years, is bleak, and it is really not improving on the ground. Yet we see the stock market going up, financial intermediaries going up. And the situation today does not justify it. But having said that, the stock market keeps going up, earlier because of foreign flows, now because of domestic flows.
Right. In terms of, what's happening as far as, NBFCs are concerned, initially what happened after demonetization is what valuations for all these banks or NBFCs corrected quite a bit. But with the recent up move, do you think that they are now no longer cheap? So there's still that element of risk in terms of bad numbers coming in or derating for the stock?
See, any sector which has gone up today, or the entire market, is no longer cheap given the kind of fundamentals that we have. If you just look at Sensex EPS from FY17 and you go back 5 years, there's hardly been any growth. Yet if you see the way the market index was 5 years ago and where it is now, there's been huge growth. So actually, fundamentally, nothing seems to be justified. But that does not stop the market from going up, and for analysts and news anchors coming up with creative ways to justify market levels.
Do you think that broking, NBFC, apart from NBFC, broking, mutual fund, that's a great business? Because we've seen stocks like Edelweiss do well, we've seen stocks like Motilal do well. Some of the other broking companies or financial intermediaries have also done well. Do you think that's a better space to be in?
See, today, as long as the stock market is doing well, it should follow that all those participants also should be doing well. Only thing on the retail side, there's very heavy competition, and rates constantly keep coming down. So, what is your business model on the retail side for broking has to be seen, because the competitive pressures are huge. And, wholesale also rates are coming down, but at least, you know that it is relatively stable. So, in this environment, it would stand to reason, as long as the market keeps going up, that those direct players which are linked to the stock market should also continue to do well.
But, in terms of what's happening with DIIs, the way domestic mutual funds are investing, don't you think that a lot of these companies would do well even if the markets were to be stable?
Yeah, but what makes the market stable or what makes the market go up and down? So far, what we have seen in India for the last 5 years is not fundamentals, and it's all flows. So as long as you have flows, I mean, there are real trades happening. So that, keeps up your business model. So as long as we have flows and we have investors who believe that the stock market can keep going up and keep subscribing to mutual funds, that will drive the market. Now, how long it can go for, it's a surprise to me that it's gone on for so long. But that is the story today.
Right, but don't you think the size of the market has also increased? So it can go up for a while still. Mutual funds are still not as big investors as FIs or any other big HNIs as well.
See, the bubble can always keep getting bigger. But one fine day it will burst. So that's what one has to be careful about. But nobody in the market likes to ever state that there is a bubble going on. So everyone looks for some fundamental reason to justify this. But if you look at the last 4 years of market earnings, it has really gone nowhere. It has been stagnant. And I've done a study of about 597,000 companies which filed, their income tax returns electronically, and their profits there are abysmal. As a percentage of GDP, their PBT, if you factor the losses, has halved from what it was 5 years ago. So this broad universe of companies, which is about 597,000, tells you the state of corporate India is pathetic, which is not fully reflected in your Sensex or your Nifty earnings.
Right, but what do you make of Nifty earnings? You think Nifty will be able to grow 14-15% in terms of earnings for FY18?
Well, at the commencement of every financial year, most brokerage houses very conveniently put out this 15 to 20% earnings growth. And by the end of the financial year, we see that it's whittled down to 2%. Of course, for 17, that's what happened. And now people are projecting a minus, 0.5% for FY17. So this is the game, the way it's played. Now, you always have to be optimistic and that, the earnings will bounce back, although the history does not justify it at all.
Right, but that's for the last 5 years. If you go back about 15 years back, every year, what markets were starting with, earnings were much higher and much better because of a low base effect. So, I mean, it can reverse one day. Do you think in FY18 will there be an earnings pickup?
No, from where are you going to get the fundamental trigger for an earnings reversal for sales growth in the corporate sector to happen? If you look at your fiscal deficit target, it is contracting for FY18. So where is the additional government expenditure which will stimulate the Indian industry? The very fact that it is contracting means that it's going to be worse. Two, what is your outlook on world global growth? World global growth has been anemic. But normally at the beginning of every calendar year, you see some spurt and people get excited that this is the global recovery taking place. But that is not sustainable. And this has been the story, not now, but for the last 3 to 4 years. So the main triggers today from a fundamental perspective are either global growth or the government expenditure picking up. And I'm not very optimistic on both counts.
But with what's happening in US, what sort of policies are expected which can lead to a lot of spending? Do you think that can be a trigger for global growth and that in turn coming to sales of a lot of companies?
You see, if the US leads its growth through a massive fiscal expansion and other developed economies follow, then, India can also massively expand fiscal deficit. And then, yes, to me, that is a justifiable fundamental reason for global growth and Indian growth to pick up. But we have to see whether that is, because markets typically don't like fiscal deficit expansion because they talk of that it leads to overheating, inflation being high, and therefore, interest rates will have to come down and cool it. And today the Federal Reserve is saying that they're going to hike interest rates. So all these factors normally are, constrictive for growth when you hike interest rates. So that's my, issue. If India expands its fiscal deficit, if world economies expand their fiscal deficit, then you're going to see global growth, which is going to be fundamental. But sadly, I really don't see that happening in this type of environment.
Right. And in terms of DII redemption, it's always a function of flows, returns, flows. So once the returns start to be muted, you could also see a lot of outflows. Is that a big risk?
See, this whole thing, as long as the market keeps going up, you will keep getting the flows. And, everyone tends to be optimistic. But the moment the market cracks and retail investors see that they're losing out and the flows dry up, then, the fundamentals reveal themselves. As of this moment, either because of foreign flows or domestic flows, all this is getting masked.
Right. Thank you so much, Mr. Azari, for joining us this morning. Always good to get a perspective.